What's up, everybody? I am looking at a new test with real money. I'm going to use $250,000 and trade the covered strangle in SPY. So let's jump right over to the platform, take a look at SPY, take a look at the trade that we have on, and let's see what we have to do. So as of right now, if you'll take a look up here, the amount to cash secure my SPY position is $257,000. So that means that we are actually slightly over pace. So I am working on a side-by-side comparison. I'm going to take $250,000 and trade the covered strangle in SPY, and I'm going to do the same exact thing in IWM throughout the rest of the year. So it'll be a total of $500,000 real money that I am going to put into these trades to conduct this study. Now, this is a little bit of a legacy position from the Outlier trade that I have been talking about. This is where I've been slowly accumulating shares simply to show an example of how we can build a relative buy and hold position that we enhance with options in our primary portfolio. Now we are jumping ahead. We are saying that we have enough shares built out. We've been running the covered strangle for some time, and I'm simply dumping $250,000 to this strategy here. So what I need to do going forward, obviously, is take down just a little bit of risk. I have a total of 5 short puts out that are cash secured. I have 3 at the 405 and 2 at the 391s. These 391s are showing a profit right now. So I didn't take them down today just because we were coming into the weekend. And I know the more time I can have short premium strategies out when the market is closed, the better they perform. So this is just in keeping with that. Come Monday, I will likely neutralize these 391s to free up that 78K of buying power, and that'll bring me under my threshold here, and then I can continue trading the strategy as is. I still have 150 shares. My basis there is 383.19, and I do have a short call out that is now slightly in the money, the 392s, and I bring that up because I will likely get called away if nothing changes, at least as of right now. And that will free up, again, an additional 100 shares of SPY, essentially, that would get offloaded at 392 from a basis of 383. So with that as the backdrop, let's take a look at SPY and see how we want to play this. Now, all of these are existing trend lines. I didn't add anything. I do, however, want to add one more that captures kind of this most recent phase in here, something like that. And I'm just adding additional lines so that I can maintain relevance to current movements. And you'll notice that a lot of times these volume nodes will cleanly line up with some of these support and resistance lines. And the reason why I want to do this is just to get a sense of how do I want to play this going forward. Right now, according to my game plan, I'm about 100% plus utilized. Do I want to be there in SPY? And I can tell you right now, the answer is no, I don't. I still see us downward sloping. If we look at these linear regression channels on a 1-year daily, and then if I move us into a 6-month daily, it's all downward sloping, down, down, down. We have lower highs, lower lows. We are seeing some shred of strength holding kind of this level in here, which looks like the 390. We've been bouncing around there lightly, and this could prove to be something that we can strike up through, or it could just be a bit of a consolidation period before we continue this downtrend. The reason why this matters is if we flash back over here, I don't want to be nearly 100% utilized based on this trade. And again, the reason for all of this is I was originally going to allocate even more money to this trade. It was at $300,000, but I thought, had a couple people ask about IWM versus SPY, and I said, well, let's look at it with a real example. So that's the game plan here. So looking at SPY, short term, still relatively bearish, long term meaning 3+ years bullish. So I have no problem getting stuck in here if I have to, but I would like to have some capital available for this trade to adjust as needed. So with that, I will take those 391s down, free up that 76K or 72K, whatever it is. I'm going to leave the 100 shares out that are covered with that call and let whatever happens, happens there. And then I'm going to continue to aggressively manage those short puts. So let's take a look at these real quick. That's the short call that is now just super deep in the money. I'm not going to worry too much about that as of right now. We still have $3 of time value, all good. I do want to look at these 405s. The reason why I care about the 405s is they were a rolled position. I had the 416s that I sent out for 457. I had a 2 lot and I bought those back for 253.50, or I'm sorry, 23.53. So that was a realized loss of 37.92. And then I put the 3 lot of the 405 puts out, and that pulled in 47.73. So that's what gives me my net credit on that roll. Added a little bit of size because I was going in a different direction before I decided to split again that 500K. So that's why I'm pivoting here pretty hard. Normally I'm a little more thought out than this as I deploy my general portfolio, but somebody, brought up that idea. I said, it's a good idea. Let's do it live. And that's the game plan. So because of that, I will take these 391s in. And right now they're not showing much of a profit, but a little bit. They're up $300. So that's just an easy answer to, again, give me a little bit more room based on current market conditions. If I was trading this as a $300,000 allocation, I would just leave it. But being disciplined in the new game plan, I need a pivot. And then the last thing is these 405s. These are a rolled position, like I said. I need to let these come in more because so far the P&L on the trade is only 2,400 and I need them to be worth about 4,000. So we got to let those 405s work a little bit. Now I could get a little weird with accounting and pull in this 333 into this trade as well and kind of aggregate the overall profit. I don't want to do that just yet. We'll see where it's trading Monday, but all in all, we will be able to release some buying power via the 391s coming off. We'll trade those 405s out, and then I probably wouldn't keep 3 lots going out. Again, if I'm going to back this down to a 250K account, I'm going to have to retool my allocation. I think as of right now, I would love to get my percent invested below 70%. So I think we will be within that threshold. Let's see, if I pull in this, if I pull in the 391s, it'll take me to 72% invested. So between that and maybe pairing one contract out of the 405s, I will be exactly where I want to be. So a couple adjustments coming up. All in all, really looking forward to this trade, and I'm looking forward to comparing it against IWM. So I'll have another video in the future. I actually just unwound my existing IWM position for a profit to gear up for this, and it should be a fun study. So if you enjoy the content, make sure you like the video, share it with some friends, leave any comments below about what you're seeing here, anything you think I should do differently before I actually get this thing rocking and rolling. And until next time, be an outlier.